What's up, everybody? Today is Wednesday, April 28th, and we're going to do a trade review. I actually took more trades than I normally do today. It was a pretty solid day. I had one or two losing trades, I think. I'll have to pull up. I can't remember what, but I think I traded 5 different names today. We'll go ahead and start with the first one here. Was in pre-market. There's actually two I took in pre-market. ADMA and excuse me, AKTX. But this was the first one. I said at 6:59 a.m. So that would have been ooh shit, way back here. 6:59 a.m. I said 228 to 222. So 228 to 222. I assume I made those zones based off of, this right here and this right here. As you can see on the 5 and the 10, it was these candles that were the high and low of my zone. And then price, as you can see, came down here. It was a slow process, that's for sure, and it was a little close for comfort there because I don't hold positions into the open, so I cut it. I'll ride it all the way up to a second before the open, but I actually ended up selling this one at the break of VWAP. I was able to consolidate pretty nicely down here in this range. It came through. Had this not been pre-market and this just been a trading day, this would be just an absolutely monstrous move. But I never hold into the open because with such significant volume at the open, see, this is over 20 million volume right here on this candle, down from 2.8. So it's or up from 2.8 rather. So I don't chance. Volume is determines everything in the when the open takes place. So I never hold. I don't care what the situation is. Never ever do I hold into the open. And actually today I took, based on yesterday's review, I decided to take 10 minutes or so after the open to shower and drink some coffee and just not trade the open. And I didn't have any mistakes trading the open. So that's good. We'll probably continue to do that for the remainder of the week. But anyway, so right here in the zone, it came through and it popped up to the top. Now, this is such a small zone. It's only 7 cents, 6 cents, something like that. My stop loss is actually going to be down here at 215. Simply because, it's this price action here. Maybe it was actually lower. Maybe it was 218. Yeah. So these two candles here, the top of these two candles define this stop loss here. It's pre-market, so I try to be a little bit tighter and less risk or more risk adverse in the pre-market. Bounced around here. My profit target was initially going to be this and then this, but once I saw the move, pretty much just you can see how dead this was. So many candles ended up, these are 2-minute candles too, so for a series of them to close with nothing having been done is even more impressive. But as soon as it popped out over VWAP here, I immediately took my profit. I ended up making 8 cents, 9 cents, something like that, which is not bad. If you took 1,000 shares, you're making $80 to start the morning. And it went all right. So, good, conservative, slow. I would definitely have preferred it to have worked out faster, but sometimes that's just the nature of pre-market. Things can move quickly, and then it doesn't have follow through on these pullbacks. And because my method is so pullback centric, it's it's sometimes very difficult to play pre-market because you're needing a continuance of volume, and that can just disappear in a time where not a whole lot of people are trading. That one did work out, thankfully. And then I also took AKTX this morning, and it worked out as well. I can't remember what the zone was on this one though. I remember this ticker sold off pretty big though. Let me tell you what the zone was here in a second. So I said AKTX 27266. This is at 733, so 733 right about here. I said 27 down to 266. 27 down to 266. So you can see here that that's the wick of this bottom candle and the body top of this candle. That was how I did that zone. Now this one actually went against me a little bit more. I had a defined stop of 10 cents on this one. As you can see on the 2-minute chart, that's a key price level for these two candles. But on these, it was just such an extended move that I just went for 10 cents just because it's safe and in the open. And I almost got stopped out. Thankfully, though, because it was bouncing and trading in this range, I ended up incorporating a little bit more all the way down to, oops, I hate when I do that. I ended up taking some actually buying up these as I saw these wicks kind of get chewed up when it dipped out here. I ended up lowering my average down to like 264 or something like that, I think. And then again, as it popped through VWAP up here, I actually think I set my order at 276, and I ended up making 15 cents or so, which is fine. That's a win. This one came close to stopping me out, sure, but it is what it is. I actually ended up buying all the way down to like 264. And the big thing about this is I was okay with adding to this just because it was moving so slowly. And then over here, it looked like, at first this wick was like, oh man, it could run. And then it came back down, and then the wicks were kind of setting descending lows, but ascending highs. So it was confusing. I didn't really trust that the move would break through VWAP as it had constantly struggled to previously. So I took my profit as soon as I could, just, to avoid that situation. Pre-market, you have to be risk adverse first, and trying to make money second. That just is, I can't stress enough how difficult it is to or how much it can hurt to have a pre-market move go against you. So those are my two pre-market plays. Both of them worked out. I started the morning up pretty a decent little amount. I mean, it was slow. I was in those moves for like 30 minutes or so, just waiting for them to do something. But the fact that they weren't like going all crazy at least meant that I didn't sit there, biting my nails or anything for 30 minutes. I was just bored. I was actually like hoping, part of me wanted to close so I could just go shower, but I was like, well, I'll just shower at the open today since, I told myself I wouldn't trade the open. So yeah, that was that one. I ended up being freed from that zone, I ended up being freed from that move, thankfully. I remember I said something in chat about like, finally I'm free. I ended up, after those two trades, 30 cents up on the day total. That's fine. I mean, if you took 1,000 shares, 30 cents is $300. That's a good day. I would, take that as a good day personally. But so I was happy to see that. Okay, let's see. So at 8:45, I returned. I said that I wouldn't trade the first however much of the open. If you watched my video yesterday, I talked about why I was just taking some trades that were so 50-50 right at the open. It wasn't worth my time. So I ended up just policing myself a little bit today and taking 10 minutes at the open and just getting my other shit done and relaxing and not worrying too much about trying to benefit from the open. And I'm happy I did. I'll continue to do that for the remainder of the week. So I called then at 8:45 I returned, so that would have been right around here. So in this candle area, I was back at my computer, and I said ADMA 2.4 to 237. So 2.4 down to 237. Now, as you can see here on the 10, that's, the body of this, essentially the wick of this, and then over here on the 5, the body of that, close to a key level of 2.4. As you can see, if it extends all the way out, it was a key level in pre-market as well. So that is how I, that's how I assessed that zone. And within the next 2 or 3 minutes, I was able to add in full here. I had a defined stop down here. Let me see. 2.3. So this is a 7-cent stop, but you can see how far down this is on the price action. If price comes down to stop me out right here, I'm totally okay with that, because what does that trend look like? It looks like it's tapering off. So 7 cents is a really cheap stop, but it was still a significant distance away. So really, really high, or a really low risk to high reward situation, which is why it was a good trade. My first profit target was going to be 2.5, and then my second one was going to be, I think I did a free play on this one. Let me see. Yeah, I did. Okay. So if you haven't seen my free play video, you can check it out. It talks about when you're scalping and you think that a move's going to be extended, you can actually get a free play out of it, which is a half position size play that has 0 risk after you've taken a full position's worth of money. And essentially, I added down here in this zone. I felt that my my zone entry was really good. Again, with the free play, it's important to have a really beautiful entry. I had an excellent entry. My average price was at 237, which is at the very bottom of my zone. And simply because this actually came down to 236, I was able to buy a little bit there as well. And I saw over here on the 5 that there was VWAP, and it wicked out of it. This closed above it. This eventually closed above it. Good signs, good signs. A little dip down to VWAP. You can see down here that volume, huge. Sell volume, the one sell candle, less. And then back to big volume again. And that's usually a pretty good sign when you do see these sell candles, for them to be lower than the highest, green candles volumes. Simply because it tells me that people are taking profit, not selling because they're scared. They're not wanting out of the position. They're just selling the money that they've made, especially if they took this move from the pre-market. A lot of people are going to sell on this high right here, the break of pre-market highs, and they're going to immediately sell into it because, they took it down here. Their profit target was probably up here. So knowing that, I could assess that with the collaboration of volume and the closing over VWAP on the 5, that this had some decent strength to break 2.5 and go for its own little run. Down here on the 10, the candle was actually, at the time, I remember, was closing up, was right here above VWAP. Obviously, as the next couple candles came to be, this body shrunk up a little bit. But at the time, it also was sitting right on top of VWAP. And like I said, anytime you see on these higher time frames a wick into your zone and a continuation, that is the perfect scenario. That is super ideal, because it means that you're not the only one who is looking for pullbacks and buying up the dips. It also means that you're immediately in the money. As soon as you get filled, price comes right back out, and you're already in the green, which feels nice. So what I ended up doing was price, eventually popped out of here. And it came up to 2.5, and I said in chat, selling half, taking half profit at 2.5, which I did. And then I said, I'm adding half my position back at 2.45. And it came down here to 2.46. I ended up getting filled. And when I do these take profits, what I usually do is as it's dipping, I'll buy on the bid. And the bid is always a couple cents less or a cent or two less than what the current price is. And you can look on your level 2 and see what the bid and the ask is. And I saw in this situation that the bid was 246. And I was like, all right, that's close enough to 245. I would have liked 245, but you know, once this got soaked up so quick, I was worried that I was going to miss it. So I got tapped in at 246. So the half a position I sold up here, I've now re-added down here, which brings my average cost, because this was so good, such a good entry, brought my average cost to about right here. Something in there, right? Maybe a little higher. So now my stop loss is there. I move my stop loss to whatever my position cost is, to break even essentially. And it's a beautiful entry. Average cost is up here, giving me a good, few cents at least of wiggle room. And you can see how a few cents in some charts is not the same as in others. You can see that there's a pretty significant amount of safety there. Had it came back down and stopped me out, cool, I would have lost $0 and I would have just made half a trade's worth of money, which was about a 14-cent move, which is, for me, a scalper, that's a good move. 10 cents and above, dude, I consider those good moves. I know that a lot of people call me crazy, and they're like scalpers are just out here taking pennies, but that's what I do. And that's a good move. So it did pull back. And then it popped right back up again, and I ended up selling at 251. I said in chat, taking half profit again at 2.5. I'm out of full position now, this time at 251. I'm holding half a position for a high of day run. This is a free play with zero risk. And at 854, I said, there you go, free play pay-in, because it had broke up to here. I held it, and I eventually sold it at 258 actually. So I didn't hold for the whole move. I ended up taking eight extra cents or so off of a 14-cent move. Adding 8 extra cents is significant. That's almost, it's a little bit more than half of my initial move for free with zero risk. Because remember, like if I got stopped out, I lose $0. So that's the power of the free play. And once it went back up here and I sold it again, I had taken an entire ride for 14 cents, 15 cents, whatever, which was my initial plan, right? My initial plan was to take a trade down here and sell it up here. And I did that. And in the process of doing that, I also gave myself an extra half a position to let it run, knowing that it would cost me nothing to get that opportunity, which is why the free play is so strong for scalping, because it allows you to catch extended moves, and it eliminates the risk of just like adding on dips of extended moves, like dip buyers, breakout traders, and things like reversal traders and stuff too. They are extremely talented at what they do. I just, for the life of me, all I can do is scalp. But it's a really good way that I've kind of developed to, at least get a piece of that pie as these plays extend. So I did end up selling at 258 here. That was the entirety of my move. But you can see, let's take a look from right here. So this is the bottom of my zone, right? I risked 7 cents, and I ended up making 21 cents total for my cost average, which is down here. So I risked 6 or 7 cents and I made this much. You see that you can just see the risk to reward. And right here was pretty close to being even to this 10 cents or so down to 6 cents or so. But those extended moves are really nice. I mean, you could technically, if you could have scaled out here and then scaled out here and just taken half a position. The free play is something that if I know I have a really great entry with some collaboration on the higher time frames that the move has some strength, I'll try to do free plays before I scale out, because free plays obviously have me in a bit bigger of a size, so my gain potential is a bit more. So yeah, that was a great trade. I was super happy with that one. Let's see what the next one was. BTX. Oh God, I traded BTX once today, and but I mean, Jesus Christ, dude, what an absolute fiasco this was. I actually think I traded it way down here. Jesus Christ, right? Wait, that's not even today, is it? Yeah, that's not even today. Yeah, here it is. That's what I thought. That's what I thought. I was like, no. I definitely went to like fucking $50 today. Yeah, unreal. Look at that. Crazy. And look how it respected the 20. Like I said in the past, the moves that happen at the 20 have a lot more pop and follow through. So you can see here, came down, met the 20, and took off. You can see that price always wants to come back to the 20. That's what I love about it. Price always comes back to the 20 at some point. It's a mean reversion style. One of my favorite traders, a guy I'm just completely impressed by, is a dude I met actually on TraderView, because you can like make comments and you can look at other people's trades and the comments they've made on their own trades. And I saw this guy, just an absolute brilliant short side seller. So I contacted him and was like, "Hey man, can you tell me a little bit about what you do and how you do it?" And he was the one who kind of opened my eyes to that mean reversion of the the waxing and waning, the out and in type of thing. Just a pretty neat perspective. Look up mean reversion strategies if you're interested, just for knowledge sake. It's pretty cool stuff. So as you can see right here, BTX, I had my zone. I said in chat at 8:46, so that would have been right. Oh, that would have been in the middle of the halt. Yeah. So it was halted up, and I made this my zone here. It halted on this candle, and then it came and filled me for 100 shares, and then it immediately took off, and I made a whole $1. And I was like, wow, awesome. And I immediately sold it because it popped up here to better over this high. Now, when I'm playing halts, and I recommend if you're a new person or you're, learning a new strategy or something, halts are a bad idea. I generally don't play halts, which is why I only bid 100 shares. Because that way, if it tanked all the way down here, I'm out $100 or whatever, right? If I'm playing halts, it's only if I'm already playing with profit and I'm only risking money I've already made on the day. And I'm quick in and out. I don't like if this move came down here to actually sub 24, I probably would have sold. Especially knowing that the 200 was right here, I wouldn't have even held it that long. The mental clock of am I right or am I wrong is amped up 300% when you're coming in or out of a halt. These things get really ugly. So I made a quick $100 actually off of almost a whole $1 move, and I immediately sold because I was scared. And when it came back down into this zone, I actually said it in chat at 8:52, I said, I do not like this action. No position. So that was right here. And then immediately, literally 30 seconds or a minute afterwards, it went and crashed. And I think Maple in chat was like, dude, you're a whale, confirmed. I was like, no, really not, man. I don't know why. It was just the halts. It halts when they unhalt. They either tank or they boom. And the fact that this one was kind of resting was not a good sign to me. You don't want to see a halt with all of this volume, just kind of like, I like to picture somebody who's just like standing in place with the smoke coming out of their ears as they eventually it's just going to boil up and it's going to go one direction, right? And the downside hurts a lot more than the upside feels nice. So I wanted nothing to do with it. And it did. It sold off big to the downside. I mean, this is if you were in the middle of this, that's almost a $2 move. That's rough. So again, I don't recommend. I ended up actually not trading BTX for the rest of the day, even though you can see here it's like, wow, dude, look at this crazy move all day. But sometimes when I got zones that are $1 wide and the move in the stock is up 100% on the day or whatever, and the volume is nuts. Sometimes the best thing you can do is just not trade it. You can watch it, learn what you can from it, maybe make some zones. I ended up making some zones that didn't get filled. I ended up getting really close. Yeah, so I was 33.50 or 34, something like that, and it came close and didn't fill and took off. And I was like, cool, that's fine. I'm not even upset. Because what ends up happening in these plays is, at least for me, I don't want to speak for everyone, but you see these stocks taking off these crazy amounts, right? Going from $22 on the day to, I think it peaked at 54. You see these and you're like, oh my God, dude, I need to get in this. I need to get in on this and get a piece of this action. And now on the chart, it looked gorgeous with these pullbacks, right? But I was at work. I wasn't watching it all day. And the allure of, wow, I can make so much money so quick, makes people forget risk management, makes people forget the downside risk, that there's an equal or potentially greater downside risk. In the same way that you can get rich quick, you can go broke quick. Especially when these things are overextended like this. And this was running on no news. I asked, and the news was a joke. That was like they hired somebody to their board or something. It just was running because it was running. When enough people pile in on it, it just keeps going. But the rug pull happens twice as quick as the gains do. When there's a rug pulled underneath you, the downside comes 1,000 times faster than this upside does. So I just couldn't find a decent pullback area that I felt comfortable with assessing, having a reasonable stop and a reasonable profit target where I wasn't risking a lot. It's easy to say, wow, if I took 1,000 shares right here, I could have made a gazillion dollars. But let's say that I made a zone right here. So this is where my zone was. It was 33.5. I remember now. 33.5 down to 32. 32.5. And you can see it almost got filled. But I would have taken, because that's an entire $1 zone. I would have taken, if my max risk was $100, I could have taken 100 shares in that whole zone, as long as I had a stop loss of another $1, which would have been, down here. I mean, it's just, I would have not taken 1,000 shares anyways. I would have still traded the same way I trade anything else, with the same risk management, the same max loss, just with a bigger price tag on it. And it leaves me less room to really benefit. Like, even if I caught this whole move, I'm making a couple $100. About the same I would make on a trade that doesn't have that same amount of anxiety tied to it. If I was doing ADMA or CLOV or MVIS or something, so it just wasn't worth it to me. It was fascinating to watch, and I hope that if you did take it, you made bank. But it didn't. Now looking back on it, hindsight being 2020, it gave a lot of really good pullbacks. But there's just sometimes they run too much, and you have to be mindful that the allure of getting rich quick, you can't let it make you stupid, because you can go broke quick. Sometimes even easier. So yeah, crazy action on that though. It'll be worth watching for the remainder of the week though. We'll see what it has to do for the rest of the week. That'll be really interesting. Let's see. Okay, CLOV is the one I did next. CLOV. Probably right here actually. Oh wow, I love it when I do it ahead of time and I already have it done. Oh shit. Sorry, I'm not amazing at navigating Thinkorswim. Thinkorswim is something I feel like I'll be learning for the rest of my life. So I called CLOV at 9 o'clock. I said 10:18 to 10:05. Is that where this was? No. What the fuck is this then? Oh wait, is this? No, I don't know. I didn't trade it at the open, I don't think. Maybe I did. Let me see. No, 8:58, 10:18 to 10:05. I said, so that would have been at 58. 10:18 to 10:05. So if you look over here on the 5 and 10 minute charts, you can see where those zones were created based on those there. So yeah, here it was. So the move ended up coming down and filling that zone pretty darn well. As you can see here, I would have had as this defined stop below 10. I actually think somebody in chat ended up messaging me asking where my stop was, and I said it was at 985. Simply because 10 is a key level, right? 10 is a key level that I didn't expect to break. And it didn't, right? But you have to remember, especially in scalping, that price will sometimes like fall through and then correct, or pop and then correct, right? So you have to give yourself room for those corrections sometimes. I think the guy who messaged me said he was stopped out at 995 or something. Like, that's a really tight risk to reward for sure, but you also have to kind of take into account the stock's daily range. You know, it's moving. You know, with each 2-minute candle, you're looking at on average, you know, 20 cents. So you kind of got to give yourself enough wiggle room that if price does come down to 10, where is something that I won't get super punished for giving room for correction, but I still do give the room for that correction. So that's why my stop is actually down here. My profit target ended up being right here at 10.5 and then high of the run. And it ended up taking a while to fill all this. I mean, this is almost 20 minutes of sitting in this trade, and I ended up taking the profit as soon as all of it I took at 10.5, simply because I had to be at work 40 minutes ago at that point. But you can see here, so as it came down below VWAP and it kind of traded in this range, as soon as it popped above right here, I knew we had a play in our hands. You know, I was worried for a little bit, but again, there's a stop loss here. The most I can lose is only ever going to be this amount. And after seeing it kind of trade in this range over a period of time, I ended up taking a few ads as it popped out. So I got my cost basis actually down all the way down to like 998 or something. Just from taking a little here, add a little here, add a little there. And then this candle popped out. And why I do that is because it lowers my average cost. Sure, I'm adding size, and I make sure that I'm still within my allotted max risk or a few dollars over or whatever. But it lowers my average so that the distance between here is actually less than if I didn't add, you know. So sometimes you equal, or you're hardly adding any more risk when you add small amounts on these lower sides, while you lower your average, simply because the distance to your stop gets smaller as you do that. But, you know, that's besides the point. Anyways, down here on the 5, you could see that price is really, really respecting the 10 and my zone. Especially, you can see that they all closed in here. This long, almost hammer-like candle here is a good sign. Jeez, I hate when it does this. You can see that the volume here was actually bigger than the buying, and that made me a little hesitant. But seeing on the 10 over here to this you know, pretty much flattened bar right here with this level of volume, after this rush and this fall off, and then the increasing volume here, I was pretty happy with it. I would have added actually in this price target range, and then rode it higher if I was just trading all day. You know, or maybe even taken profit and then re-added. But I had to sell because I was already late for work. But yeah, beautiful move, and you can see as it kind of consolidated in this range. Now that would have been a 15-20 cent range to incorporate all of that, but good move nonetheless. Then I ended up getting to work at 10 o'clock, and open up my phone again, and I said, Clove, I will add 1037 to 1028. So 1037 to 1028. and I ended up getting tapped in on only like 200 shares or 300 shares, something like that, whatever my top 2 bids were of this zone. And my defined risk was actually just down here below VWAP, so 10.2. Pretty tight stop. Profit target was high of the run. So I ended up actually making it all the way up here, selling and making a good 40 cents off of that move right there. Now, unfortunately, I wasn't tapped in full. As you can see, it didn't fill my entire zone. Had I realistically made a 10.4 zone down to, maybe a 10.4, I don't know. There wouldn't have been any candles to do that with. Yeah, I'm pretty happy with that. Maybe, yeah. Anyways, I made my zone. Made 40 cents or so. Now, it wasn't full size, so it wasn't, a super huge payout, but it was still a beautiful move that never really went against my lowest add point. And that's always really nice and gives you a lot of confidence, especially if you wanted to like scale and add. Like you could have added right here in this consolidation and rode for more. So as it came down right here, you could have, see that action. Consolidating, adding, taking off. But it's beautiful to see like the lowest point that price got was to fill one of my bids. So I was actually hoping the price would come a little lower and fill my bid, maybe come closer to VWAP. But it didn't. It never came back lower than the lowest bid I was filled. So it went straight up and I took my profit. Again, at this point I'm on mobile. So I don't scale, I don't add, I don't do free plays or anything like that, just because it's really difficult to like navigate mobile. It's already hard enough to do descending bids in mobile. So I avoided it, and then I ended up taking MVIS almost right after. Let's go take a look at that. I did take one loss today. I gotta figure out where it is. It was early in the morning, so we must have missed it, but it's okay. I don't remember exactly where my MVIS play was, so we will figure that out. MV at 10.18. So right there, yeah. So at 10.18, which should have been in this price right here, I said 2.3 down to 24.3 down to 24. 24.3 down to 24. You can see over here how I formulated those candles. So 24.3 down to 24. As you can see here, the price came, and similar to Clove, it tapped me in about half my orders. I had 2 orders down here that didn't get filled. But it immediately went for my profit target of 25, which is that whole dollar. And I immediately got it. I mean, it was really, really quick. You can see how fast this price action was here. Corroboration as far as, what was I looking for if I wanted to add? Nothing. This is actually one of my favorite types of plays. And I mentioned this a little bit yesterday because I went out of my way to specify, like, I'm not holding for a high a day. And this is one of my favorite plays in scalping because it's a sell-off after a high a day and a FOMO correction is what I call it. So what happens is this stock runs high a day. And then it sells off, and everybody who's like, oh man, I'm just going to get in when it comes down a little bit, and we'll ride to the next high a day. Those people who FOMO, missing that move, will buy up these dips so long as they're to a reasonable level. And people bought up the dip, anticipating, oh yeah, now I'm going to get my high a day run. Since I missed the last one, I'm just going to get in on the next one. But as you can see, volume is actually lower than it was on this initial run. It took this big push of volume to push this price up, and the volume here was actually tapering off. So you can see now that it's below this average, I knew, similar to the play yesterday, any move that comes immediately after these high day runs like this with depreciating volume, or decreasing volume rather, I immediately shoot for a more conservative price target, never high of the day. Because I'll let those people who are FOMOing and wanting high of the day and holding and failing, I'll let them carry me for a sweet little ride. And they did. I mean, this is almost a dollar move that I took just really, really quickly. And I was immediately out at my price target. And so this happens a lot. I take these style of moves a lot. I take advantage of the psychology of people who are who miss this or think that they're going to get another one of those, and they quickly buy and fail. And I'm not holding for, as long as they are. I'm just letting them take me for that quick little push, and then I say, see you later, as they're left to deal with the failure of that move as it bounces out. And that happened, I can't remember the ticker, it happened yesterday, but if you watched yesterday's review, I talked about it specifically. This is the exact same situation. One of my favorite plays in my playbook, which is the the secondary FOMO correction. It just kind of cracks me up because you think about the people who are because I've been there. I've been that guy who's like, oh shit, I missed the high day run. I'll just get in when it dips right here, and then I'll hold for high day. And I hold and I hold and I hold, and I make profit. And I'm like, come on, keep going. It's going to do it. And it doesn't. And then I end up losing. So instead of being that guy, I found a way to take advantage of that guy. And, that's something and I took advantage of that guy is something I'm proud of. And so UXIN actually was the next one. So all three of these happened really, really close together, because I was struggling to keep up with my own calls and to bounce back and forth between Discord, as well as to bounce back and between Discord, as well as putting in my own orders. So this one was at 9:58. This one actually was almost a whole hour move, but had I had the time to babysit it, this could have been a huge gain on the day. This could have been just an absolute monster play. So right here at 9:58, so price is here, and I called this zone. Obviously, it came down and respected it quite well. It looks like a huge zone, but it's actually only 9 cents. So I added down here in this area. I ended up adding down all the way down at 2.4 and getting my cost basis to like 2.43. And then I held, and my profit target was 2.6. And then a secondary profit target was going to be 2.75. Now, because the move ended up taking longer than I anticipated, it came above VWAP. You can see that it kind of held on the 20. If you look over here on the 5, it pretty much coincided with the 20. I mention it all the time that price likes to revert back to the 20 and kind of fluctuate with it in and out. So this is a good move of strength, especially if you take into consideration, if I would have held this longer, being at work, it's harder to do, so I usually take my sure gains. But if you would have seen this tweezer top with this engulfing candle here, great sign of a reversal. And you could have put your stop loss above your entry even, just to be safe, to make sure you do make money, and just let it ride all day. And it ended up going from that move. That was the one pullback, perfectly placed pullback, that ended up taking the stock way higher in the day. You could have technically, on a $3 stock, made almost an entire dollar move, which is nuts. Now, granted, you would have had to babysit it and stomach the waxing and waning, the reverting before it, would have gone up. What is that, 4 hours later? And that's just not my style. I'm happy that I ended up taking 20 cents on the trade, which is cool. I'm, at work, I ended up making 80 cents on MVIS and 40 cents on CLOV, and then 20 cents on this. So at work from my phone, I took almost $2 worth of scalps, which was, this is amazing. I consider that a good day if I'm sitting here at my desk. So I was super stoked that I was able to continue my good fortune at work. Now, I did take one loser on the day. Let me see if I can figure it out. Oh, it was ADMA as well. It was ADMA as well. I have pretty good faith in ADMA. Yeah, here it is. So it was ADMA, but it was later in the day. Also while I was at work. So I did take one loser on the day while I was at work, which is okay. We take those. But generally speaking, I have a decent hit rate. And the reason for that hit rate, I don't want people to get the wrong idea that they're like, dang, dude, this guy has like 85% accuracy or whatever. Because I do, for sure. At least based on this week. And, today, I think I was 7-1. One loss and 7 wins or something like that. And that's great, right? That's great. But you have to keep in mind that it's because my profit targets are so tight. Somebody with a 50% hit rate might make 4 or 5 times as much money per trade as I do, simply because scalping, I'm, taking 10, 20 cents. Moves that you're a little bit more sure of, with stops that are a little bit more tight. And when you have that, smaller range of expectation and goal, it skews the win rate. So don't get it twisted that, I'm something I'm not, or the strategy is something it's not. It's just how scalping works, which is, part of the fast in and out is a lot of why I love it. And, I know there's a lot of people who make a lot more money doing other things, but you don't think that you can't make decent money scalping, because you can. It's what I'm good at, and I play to my strengths, and I have no qualms about it. So ADMA at... I'm trying to figure out where I said I was getting in. I want to say that it was at 9:52. Okay, so I had just gotten to work. 9:52. So yeah, right up here. So I remember exactly where it was. It was at 2.4. It ended up being like 2.45 down at 2.4. Oops. And I saw that at the time, 2.4, if you look over here, was this beautiful arching motion to a key level from a pre-market, this was my range, I remember now, because it was pre-market high down to that 2.4 level. So it was a 3-cent range right here. And I even said in chat, I said, this looks really good, 10-minute chart plus the 20 SMA. I have a very tight stop, but a great risk to reward. My stop ended up being 235. So I was risking 5 cents. 5 cents, which means I could have taken 2,000 shares and lost $100, or 1,000 shares and lost $50, whatever, based on, I've spoken in the past about your max loss and how to figure that. Actually, after I'm done with this chart, I can talk a little bit about that, just to clarify. But yeah, so right here, it ended up tapping me out. And then it bounced a little bit, but I didn't go, oh my God, I was so close. Let me just get back in. I could fix it. I can fix it, because it didn't come back through, I never do that. I reassess, give it some time. There was other tickers moving, and I, thankfully moved on to those. But yeah, I did take a little loss right here. The upside was significant, obviously, 20, 30 cents potentially. If you're looking at 2.6 here, this had potential to bounce off the 20 and just be this gorgeous slope, trending upwards. And it failed. And I have no struggles with that. My stop was tight for a good reason. I could have even made it maybe 10 cents. I still would have gotten stopped out. Nothing would have changed about the move. But yeah, I ended up taking a 5-cent loss here. And, that for a much better upside, 10, 20, 30 cent upside to a 5-cent downside, that's a great risk to reward. And the fact that it didn't work out didn't, negatively impact my entire day or anything. And that's important, because you think about 5 cents, 5-cent loss it sucks to lose, right? It sucks to be like, damn it, I was wrong. That went against me. I posted it in Discord, and now I'm wrong, right? You can't think like that. You have to think like, in the grand scheme of the day, I made $2.40 worth of trades, or maybe $2.35 worth of trades in gains. That 5 cents, when you think of it like that, it means so little, right? So it's important to not get hung up on each win and each loss. And then at the end of the day, the end of the week, the end of the month, average everything together and say, well, today I net profited, you know, X amount of cents, X amount of dollars, this much percent on my account, whatever. And when you look at it like that, it'll kind of help you teach your brain a little bit how to, you know, and how to be able to move on from a losing trade onto the next trade without bringing that with you, without bringing that that feeling and that aspect of like, damn, I just lost. I need to win bigger on the next one, or I have to win the next one, or damn, I just won. I'm killing it today. Like, it's important to be happy or sad or whatever about your trade, and then when you move on to the next one, to be a blank slate. Because like this trade had nothing to do with my success or my odds of success or failure on MVIS immediately after, or on CLOV immediately after. And by using the system with such tight stops and defined targets and stop losses and stuff like that, it's easy for me to say, okay, the system here did not work on this move. The stock didn't do what I wanted it to. Okay, let's go to the next one and let's implement the same exact method and see if and I know that the strategy is more often right than it's wrong because of the way I use it and my familiarity with it, the time I spent developing, testing, and all that stuff with it, and you know, I trade with it every day. And eventually that will help build your confidence. Once you can have faith in like the way you trade, knowing that you can do it, that will help a lot to leave the losses, you know, where they belong. But I guess real quick, I will bring up the chart that I use, or that when I started trading at the firm, they actually sent me a this thing that we use for risk management. I'm trying to figure out where I have it. I sent it to somebody just the other day. I could have swore. I get a lot of messages a day, so I apologize, guys. Maybe it was this one. Fuck it. Let me just find it in the. I posted it in the Discord before. Yeah, here it is. Okay, cool. So this is the chart, right? Let me show you how I formulate this, okay? And how I use this to weigh my position sizes. Just ignore this stuff at the bottom, in the levels or whatever. When you trade for the firm, you start off with a small account and you get moved to a bigger account. So you're allowed to lose 100 a day, and then you're allowed to lose 200 a trade, and then 200 a trade or whatever. So the way that it works is that I will let's look at a stock really quick. So right here, first thing you need to do is figure out how much money is in your account. How much money is in your account total? Let's say that you have a let's go for a PDT, $25,000 account, right? Now you have to figure out what 2% of $25,000 is. 2%. You can actually, if 2% is too big for you, it's a little too wild for you, you can do 1%. If you're a little bit more aggressive and you know it doesn't bother you as much, you maybe do 3%. I do 2%, but you can tailor it how you will. So 2% of 25,000 is going to be $500. 2% of 25,000 is $500, which means that on a $25,000 account, I will allow myself a max loss of $500. Now, if you wanted to make that 1%, it would be $250. For the sake of example, we're going to assume it's, and that's just how you figure that out, right? That's how you figure out 2%, your max loss per trade should be no bigger than that. You mean you have to risk that every trade? That's just like what you should Put a hard stop at like never more than that. And doing that will keep you around longer, which is important. That'll stop the bleeding during the weeks that are hard, the months that are hard. And then it'll give your good months and your good runs a lot more room for success. Now, back to the chart here. Let's assume that I have a $5,000 account simply because it matches the chart a little bit better. And my max loss per trade is $100. Oh, you know what? Let's say I have a $10,000 account. I have a $10,000 account. My max loss per trade is 2%, which is $200. Let's go to BTX. That was quite a bit bigger move today. So let's say, here at BTX, that I was willing to risk a grand total of 2% of my account, which equated to $200 because I have a $10,000 account. Let's say I added a zone here. Let's make it easy. 29. So this is a dollar wide zone, right? Dollar wide zone. So it's safe to assume that adding in this zone, you would get your average down to probably 28.30, 28.20. It depends on where your ads are. But then you have to figure where your stop loss is, right? Because remember, I don't ever take a trade if I don't already know my stop loss. Let's say that down here at this price action, 26, is where I'm like, if it comes down there, I'm comfortable in believing that's a failed move, failed plan here, right? And then my profit target would be, fucking whatever you want it to be, 30, high of the run, I guess, right? So that's a $2 and change upside to a $2 downside. So now I have to figure, how do I make the gap from here to here? How do I make that gap? I guess we could have done it like this. How do I make this gap right here no larger than that 2%? The gap from the bottom of my zone, or really it should be from wherever your average cost is, but I can't tell you that now. It depends on the situation. From the bottom of my zone to where I've decided my stop loss is going to be. How do I make that the 200 max dollars I'm willing to risk? Well, it's easy. What you do is you open up the chart. You can do this in your head. I obviously can do it in my head at this point, but you figure out, okay, what is the distance between, this is probably a bad example because it's more than $1. Let's move it up here. Let's assume that, 27.5 is my stop loss. Same example. How do I get that gap right there, the gap from here to here, to be $200, right? You open up the chart, and you don't need this chart. I mean, you can have bigger stops and stuff like that. This is just a quick little explanation. So I will go to, what is the distance between my stop and the bottom of the zone? 50 cents. 28 down to 27.5, right? So then we come over here. We find 50 cents. 50 cents is right here. 200 is my max loss. $200 is my max loss we've decided on. So with 100 shares, 200 shares, 300, here's 200. I can see 200 here. So then you go up to the top of that column that you're in, and it shows you that's your max position size. 400 shares with a stop loss of 50 cents will result in a max loss of $200. 50 cents, find where your max loss is. So again, we've got that from 2% of our account, or 1%, or whatever you're doing. And then I come here on the chart, and obviously this can extend into infinity. This is just a small, simple chart. But I'm like, okay, my stop loss is 40 cents. And let's do a weird one. 35 cents is my stop loss. And I'm willing to risk 200 per trade. So I'll come over here until I find 200. Oh, that's 210. So that's actually above my max loss. So in this situation, you decide, can I still make an extra $10? I usually don't. I usually will go a size down. And so this is the first number that is under 200 or equal to 200. 500 shares is my max risk on 35 cents. We'll come here to 30 cents. 210. Okay, we'll go back to 180. 600 shares is my max risk with 30 cents. Now 10 cents, you can go all the way up to 1,000 and only risk 100, or 20 cents all the way up to 1,000 and only risk 200. So that's how this chart works, and other charts that are similar. And this isn't the end all be all of risk management charts. This is just a simple one that I've been sent in the past. And this is a bad example. I should have used a different example, but I hope that that clarifies how I assess my max risk. I don't say, okay, I'm in this position, 1,000 shares. I only want to lose 100 to 200 bucks, so let's just make my stop 10 cents, right? Never do that. What I do is I base my, again, let's say that I had a zone here. I base my stops off of technical analysis. If I think, okay, yeah, I think down here is a failed move, then I factor in that distance. So this is actually a $2 zone, which means I can take 50 shares and risk $100. So, and my profit target would have been like, wherever, it doesn't matter. I immediately know, based on where my stop is, what I can size. You never want to size and then adjust your stop accordingly, because that's just asking for trouble. That's asking for moves to tap you out, and for you to not give yourself the room that you need for plays to work. You don't even give yourself a chance if you're sizing too big and then making your stop too tight. You can have a max dollar amount per trade. That's totally fine that you're willing to lose, but always make your stop loss based off of some kind of technicals, a failed trend, a collapse below a key level, below an indicator, something like that. And then you can just factor in the difference of your bottom of your zone to your stop loss, and then adjust your position size accordingly. Doing it in that order will, I guarantee you, I promise you, will give you a lot more success for a lot longer than to size into a position and then base your stop off of your position size. Just don't do it. This is this method that I've just explained right here. This is the way that you will keep yourself in preservation mode in good, bad, ugly markets. It doesn't matter. This is definitely what I recommend. It's what I teach anybody who would ask me how to do it. It's how I do it every single day. So this definitely went longer than I anticipated, but it was a longer day of trades, the risk management stuff at the end. So hopefully you guys have a great rest of your day, and I will see you again tomorrow for the next session of trading and I guess a review. Be well, guys.